Hi, everyone. We're going to do a quick update on our forms and clauses. We do this typically yearly. OREA provides us our forms and our clauses. And we're pretty fortunate to have these standardized forms and clauses available. They are updated yearly. So OREA has more than 250 forms available to you to be used in various types of transactions and under different circumstances. What I'm going to recommend to you is that you learn the names of your forms. Start using the names of the forms regularly so you get used to it. Do this so that when you are searching forms, all you have to do is put in sort of the use of the form or the title of the form and it'll pop up. If you are counting on your memory to remember the numbers of the forms and you don't know what they do, you're going to have a very difficult time searching through the OREA forms for a specific form you may need. Whether it is a termination or a schedule or whatever it is, use the names of the forms. Okay, so that's my advice to you. This year, there weren't too many changes in the forms and clauses. OREA came up with 3 new forms. They've come up with a confirmation of co-op and rep for the tenant and landlord. You can still, of course, use your regular sale confirmation of cooperation and representation. But this one is specific to the tenants and landlords, so that's available to you. There are also 2 new forms that were created, and these are for FinTrack recording purposes. So these are available now. There aren't too many instances where we'll be using the politically exposed person, head of international organization checklist record. However, the beneficial ownership record is one that will probably be used more often now. Due to our requirements to do third-party identifications for FinTrack. So those are the 3 new forms. The revised forms, one of the revised forms was Form 100, which is your agreement of purchase and sale. And on page 4, clause 27, they've included the permission of the parties signing to use electronic signatures. So this is something that is new in the pre-printed format. You're still going to be seeing this in a lot of people's Schedule Bs or in Schedule As until they figure it out that it's already in there. There were about 18 other minor revisions to other forms. I did not outline them here. Most of it is, what's a good way of putting it? It's just tidying up clauses and that sort of thing. If you want to go into specifics, you can go into the OREA website and find out what all the changes are, but a lot of them are just typos or cleaning things up in the forms. So there's nothing there that you have to be concerned about. They have revised some standard clauses. They've set up a clause for deposit pay by electronic funds transfer. So you can use that in addition to your standard deposit pay clause by bank draft or certified check or large value wire transfer. Documentation review, electronic signature consent. These are all newer clauses or clauses that have been edited. So take a look at them if you want to go into the OREA website, or you can access all of these forms and clauses, of course, through TREB. When you go in through the home page and go under information and forms and clauses, it's in the same area where you find the forms explained. So if you need some help finding that, give me a buzz. Otherwise, you can speak to your manager about that, okay? I'm just trying to figure out how to do this. Okay. So let's review some of the forms that you need to understand, because there isn't an awful lot that's being updated on the OREA forms and clauses. I'm going to just go through some of the things that we have recently been having issues with. Now, I'm sharing my screen. Are these, hold on, let's see if I can get rid of this. No. There we go. So let's go through some of the things that have been giving us grief, things that we're picking up that are problems that agents are not filling out correctly, or that have been brought up to our attention recently. The first one is seller's direction, re-property and offers. This is something that is now going to be compulsory at our front desks if you are holding off offers. When you are taking a listing and holding off an offer, RICO does say that you have to have written direction from your seller if you're holding off offers, because of course we are tasked with, as professionals, presenting our sellers with any offer at the earliest practicable opportunity, is what they're calling it, so as soon as possible. So if we are being directed to hold off offers for any reason, we need the seller's written direction. And OREA has provided us with a form so that there is no misunderstanding of the written direction, okay? So when you're looking at this form, there is an area here that says no conveyance of any written signed offers prior to. And a lot of agents are just filling that out and thinking that does it. That's not what that first section is for. It says conveyance includes but is not limited to presentation, communication, transmission, entertainment, or notification of. So what this is saying to you is, if you get a bully offer, you're not to tell your seller client. Now, I think a seller client would be quite upset if there were a fabulous bully offer that came through and you didn't tell them about it. So I advise agents to steer away from that first area of this form. Other areas where you can put in your directions are just underneath it. An example would be no offers until, and you put the time and date, but notify your seller of preemptive or bully offers, notify them of the detail, and the seller may entertain it or may change his written direction. So that's usually where you would put your instructions after explaining to your client exactly what that means. Another example of holding off seller's written direction, would be if the seller is directing that during multiple offers, there will be no reductions in commissions. And that would give everyone, you explain to them that would give everyone a level playing field, and it will stop any offers from backing away because of an unfair competition. So if that is something that you and your seller decide on, here's the spot where you would put that in writing. So that's that form. And again, our front desks will be asking for it with any listing that indicates that offers will be held off, or if anything unusual is being directed by the seller, such as no commission advantages. The next one, the next form that we have a lot of trouble with is the confirmation of cooperation and representation. It gives you pretty much an explanation all the way through of what your clients or you are acknowledging is the representation. So here in your first section, and it does say that the listing brokerage and the cooperating brokerage may fill these out separately, not separately, may fill out the form in two different parts. However, if you are the cooperating brokerage and you know that your listing brokerage is representing the seller, which they are if they have the listing, then you can fill out both parts of it. So under listing brokerage, the brokerage represents the interests of the seller in this transaction, but read the fine print. It says, it is further understood and agreed at that. So you're filling out A, that first part, but then you have to fill out 1 or 2. So whichever is applicable, which is that the listing brokerage is not providing customer service to the buyer, or the listing brokerage is providing customer service to the buyer. So read through, make sure you understand the way the form is set up and what you need to acknowledge in it. The next one is multiple representation. There is a lot of misunderstanding that if you are the listing agent and you have a buyer customer, that you are in multiple representation. This isn't true. If you're the listing agent and you are providing customer service to the buyer, you are not in multiple representation. So read through it, make sure you understand that part. The only time you are in multiple representation is if you have a listing agreement and a buyer representation agreement within the same brokerage. Okay. Down here, you've got another option that the property is being sold by the buyer brokerage. So you are working for the buyer under a buyer representation agreement, and the property is not listed. So the brokerage represents the buyer. Property is not listed. The brokerage will be paid as follows. Now, this is also the section that you use for a mere posting. And again, if you are dealing with a mere posting, please reach out to your manager. We have the correct wording to be included on the confirmation of cooperation and representation, as well as the seller customer service agreement saying they will pay us directly. So reach out if you're not sure of how to fill these out. Here's the section for the cooperating brokerage. This is the part that they're saying that you can fill out separately as a cooperating brokerage, separate from the listing brokerage. But again, cooperating brokerage representation. Take a look at them. One of these should fit if you are the cooperating brokerage. You're either representing the buyer in the transaction, or perhaps providing customer service to the buyer and it's not your listing, or the cooperating brokerage is not representing the buyer and has not entered into an agreement to provide customer service, but you are preparing the offer and bringing it to the seller. So if the listing agent is in multiple representation or has customer service agreement, there is no cooperating brokerage. You must at that point make it clear that there is no cooperating brokerage and therefore commission is not mentioned on this form. We, as a brokerage, have company policy that if the listing agent is in multiple representation with an agent in our brokerage, or that the other agent is providing customer service within our brokerage, we will pay the full cooperating portion of commission as per the MLS listing. But nowhere on here do you talk about commission if it is within the brokerage, because the seller is paying the full commission to the brokerage, and it's up to us how it's dispersed. And we absolutely pay our agents who represent buyers the full portion of what is represented on the MLS agreement. Just back in here to 2.5% plus HST. I know you have all had me discuss this before. You do not try to avoid that plus HST. As long as commission isn't being changed through negotiation, it doesn't matter whether the HST is there or not. But as soon as you start fooling around with the commission, such as doing a reduction in commission, understand that putting the HST in there can cause real accounting problems. And that is because 2.5% plus HST minus $5,000 is not the same as 2.5% minus $5,000 plus HST. It doesn't come out arithmetically to the same amount, and it causes accounting huge headaches. And also understand anytime commission is mentioned anywhere on our OREA forms, somewhere in there, it always says plus applicable taxes. So the HST is already covered off. Okay. Remember, this is another spot. RICO is very, very adamant that whenever we are in multiple representation, everyone consents to it, and they do it repeatedly. They consent to it on a listing agreement, on a buyer representation agreement. They do it within the offer, and then again here on the confirmation of co-op and rep. Everybody has to be aware that they are in multiple representation. Our next form that we're going to talk about areas where we see confusion or where agents are not clear is our agreement of purchase and sale. Our agreement of purchase and sale is quite specific about several things. First of all, our schedule, anything that you add to the agreement in the way of a schedule overrides pre-printed clauses. So be careful with that. Our Schedule B overrides negotiable check with certified check, bank draft, or wire transfer. And in most cases, that is correct. Make sure that if you are doing something with, for whatever reason, there is no definition about the deposit, make sure to change negotiable check to either certified check, bank draft, or wire transfer. We do not accept non-certified checks, neither do most brokerages. So I just want to point that out. The next thing I want to point out is the completion date. The completion date calls for vacant possession. Whenever you are dealing with a property that is tenanted, you cannot guarantee that you will be giving vacant possession. You can supply your tenant with the N12 if the new buyer wishes to use it for his own purposes. They can sign off on it, but there is no guarantee that the tenant will move out. This has caused problems upon completion. So please be aware and use the proper clauses. One of them is that the buyer agrees that the seller will give the proper notice to the tenant because the buyer wants possession for his own use, and that's your clause here. But make sure the second part is included, and make sure everybody is aware that in the event the tenant fails to vacate the property prior to completion, the buyer agrees to assume the existing tenant. This is in here for your protection and your seller's protection. 99% of the time, the property does close because the tenant understands they have to leave. But if something should happen that they don't leave, you don't want any sort of major negotiation at closing between the lawyers because the tenant hasn't vacated. So be aware of this, and please use the correct complete clauses when you are asking a seller to give notice to the tenant, and your buyer has to understand that the seller cannot guarantee vacant possession. Also, as a seller's agent dealing with tenants, please understand that you cannot guarantee vacant possession. The next thing I want to talk about is where the brokerage represents both the seller and the buyer in multiple representation. The brokerage is not authorized to accept or give notices on behalf of the parties. You at that point have to have your client's email address, both clients' email addresses, or be able to go out and physically get acknowledgements and signatures from the buyer and the seller, especially when giving notices of fulfillment, etc. Please make sure that you're aware that you're not allowed to accept those or sign those acknowledgements. And what's our next one? Down here, inspection. This one's caused some grief. The buyer acknowledges having had the opportunity to inspect the property. We've just gone through a whole very hot market where inspections were not being performed. And then at the last minute, some buyers' agents were coming back saying, we want to do a building inspection because we have the opportunity in the pre-printed clauses. That's not what this says. This says you had the opportunity to do your inspection prior to preparing a firm unconditional offer. And you've also had the opportunity to include an inspection condition in your offer if you didn't do an inspection prior to submitting a firm offer. So just be aware of that. This is not an extra clause for you to have a building inspection once you put in a firm offer. Just another little note, a visit is not an inspection. We do not expose your sellers by allowing an inspection during a visit. We've had a lot of that going on as well. So just be aware of that. If you've got a firm offer on the table, protect the seller, your seller, by not allowing a building inspection during a visit. And also, as a buyer's agent, you have to explain to your buyer that a firm offer is a firm offer. A buyer's visit is for the buyers only, as well as the agent. If they want to bring anybody else, they have to get permission, and it is not necessarily given. If you have a tenanted property, I've been asked several times recently on having rents. Is there a clause for rents to be moved to the new agent or to the new landlord? Right here during the adjustments, any rents will be apportioned by the lawyers. So if you're holding last month's rent as the seller, and that will be apportioned on the adjustments on closing. The next one is property assessment. This is just to let you know that for several years now, the property assessment clause has been in the pre-printed clauses. Oftentimes we're seeing this in other brokerages, Schedule Bs, or agents will even put it in the Schedule A. Try not to have duplicate clauses in your agreement of purchase and sale. It can cause, I guess, uncertainty and can cause a problem if both clauses are not worded exactly the same. So it's already in there. You don't need it again. About the assessments, about properties being reassessed either on an annual or however often they're done. The next one, Family Law Act. Just to let you know, and there's always questions about this, a common law relationship is not a spouse. It is not a legal spouse. Whether or not the matrimonial property or the primary residence of the husband and wife, common law, whether or not that's going to be split up or apportioned upon the sale, that's up to the lawyers, and that is up to the individual lawyers and whatever their agreements say. It's got nothing to do with us needing a spousal consent to sell the property. The only time you need a spousal consent is if one or the other of the parties who are legally married is the only one on title and selling the property, and it's being used as a primary residence. That's when you need spousal consent. Legal, accounting, and environmental advice. Parties acknowledging that the brokerage is not giving legal, it's not considered legal, tax, or environmental professional advice. Again, we see this a lot in other people's schedules A or B. It's already in the pre-printed clauses. The next one is agreement in writing. Let me see. If there's any conflict or discrepancy between anything that is in the agreement of purchase and sale pre-printed clauses, anything that comes in as Schedule A, B, or whatever overrides anything that is pre-printed in this form. It's self-explanatory in there if you go in and read it. So just make sure that you understand that if anything that is coming in a Schedule A or B addresses anything already in the pre-printed forms, that you are aware of exactly what that means in the Schedule A or B, because it can nullify the clauses within the pre-printed offer. And I just want to mention here, and this is all about agreements in writing, RICO may entertain text or email evidence if they're looking at something that you've done wrong, or if you're being fined or brought up as the source of a complaint before RICO. But the courts will not entertain texts, emails as written agreements. So be careful that your agreements of purchase and sale and all of your other forms are done correctly, and do not negotiate by text or email. Electronic signatures, again, we still see this clause in Schedule A's or other brokerages Schedule B's. It's now within the pre-printed portion of the offer. This is one of the ones that was newly added to the agreement of purchase and sale. The last thing I wanted to address before I take questions is, as the market has shifted a little bit and we're into a more normal market where people are not taking out every condition they can think of. So offers are now coming in with building inspection conditions, financing conditions, and we're even seeing some conditions upon the sale of the buyer's property. There is a clause that anybody who was working in the business prior to the, I guess, frenzied purchasing of the last couple of years, we would see these quite often. It's a condition on the sale of buyer's property. Got a few things to say about that. If you are the buyer's agent, make sure you put in the escape clause. The escape clause is pretty much standard within the industry. People are not going to accept a condition on the sale of your buyer's property without being able to continue to market the property you're buying. And if they get an offer that's satisfactory to them, what they do is they give you notice to either firm up or walk away. You have sort of like first right of refusal, if you will. So if you, as a buyer's agent, put in this clause, you have a little bit of control about how long your buyer will have to either waive their condition or sign a mutual release and walk away. So if I am the seller's agent, I want that to be 24 hours because I want a quick decision from you. If you are the buyer's agent and you put in 72 hours, most agents will not challenge that. They may take it down to 48 hours. But as the buyer's agent, try to give your buyer a little bit of leverage and give them as long as possible to make their decision on whether they're going to firm up their offer or walk away from it. The other thing is your escape clause. There are a couple of different escape clauses in there, and they're worded exactly the same, except in this one, as the buyer's agent, you are removing this condition, but any other conditions that you may have in your offer, such as financing or building inspection, remain in the offer. So this is to the advantage of a buyer. If you are the seller's agent, you want to use the other one that removes all conditions with the giving of notice. So that's something that I'd like you to really take a look at when you're looking at as an escape clause. The other thing I will say about sale of buyer's property, as a listing agent representing your seller, you have every right to have a very nice conversation with the buyer's agent, but you want to see sort of, do they know what that buyer is going to be listing their property for? Are they going to be listing it on MLS, or are they going to try to sell it exclusively or privately? Those are just things that you want to have as a conversation with your buyer's agent so that you know how much weight to give this condition on behalf of your seller. So that's what I have for you on forms and clauses. Oh, I know what else, mutual releases. That's another item that we typically have issues with when mutual releases are being prepared. And it doesn't matter whether it's by our agents or other agents bringing it to us. Here are things that must be reviewed when you are looking at a mutual release, and you make sure that these items are correct. You have to have the correct buyers as per the agreement of purchase and sale, the same with the sellers. Make sure the brokerages are on the right definition here, whether it's the listing brokerage and the cooperating brokerage. Oftentimes we see those reversed, so be careful. The agreement of purchase and sale dated, that's the agreement that is referred to on the APS at the top of the first page and actually on every page. Make sure you have the correct date in there. The correct, the correct property as described in the APS. But more than anything, we're seeing issues down here where either the dollar amounts in numbers and words don't match. We've seen where a deposit has never been received, but the deposit amount is in here and still payable. You need to know who it is payable to, not just buyer or seller. Try to be specific. And just make sure when you're reviewing your mutual releases that all of these are correct. Also, if you are offering a mutual release as the buyer or the seller for that matter, give the other side enough time to sign off on it. And as brokerages, when it is our buyer and we're asking for a return of deposit, oftentimes we will pre-sign as the cooperating brokerage. However, if I am the listing brokerage, I want to make sure that all signatures are in place and that they absolutely match the agreement of purchase and sale. So the listing brokerage is the last one to sign off because they're the ones that are giving out the money, and we want to make sure it's correct.
Thank you so much for watching. If you like our video, please hit the like button, the subscribe, and even the little bell to get notifications, just so you can stay in touch and watch more of these great videos.